when it comes to looking at properties and real estate as an investment, do different investors look at it more from an appreciation standpoint or a cash flow standpoint. Do you have a specific kind, and how come you look at it that way?
I don't believe in the pure appreciation as a thesis to purchase a property. Real estate is very cyclical, so the prices are not something that is written in stone. So I think a property should have life of its own, be a good investment, and for you to be able to sell it if it's convenient to do so, if the cycle works in your favor.
Okay.
But I think the bet on just the appreciation of the value of the property is not sufficient for me to buy a property.
Right. Okay. So when you go for like higher cash flows, are you going to a different type of location? Because from what I've seen, the like A locations, it's just almost impossible to buy them. Maybe it's the time, the last 10 years, but are you sacrificing maybe quality or location for better cash flow, or does that not go hand in hand all the time?
They do go hand in hand, but you have to analyze everything in your life on a risk-adjusted basis.
Okay.
If you are taking less risk because of the quality of the property, you are willing to sacrifice return. But again, it has to have a decent return. If you're going to make, if you're buying a 4 cap today and you're financing it at 4%, it doesn't really make a lot of sense.
Right.
If your cap is not higher than the cost of money, then what's the point of levering a property? It's just taking a risk. So to me, it makes sense when the property returns at least a couple points more than the cost of the money to buy it. So the 30% I put in equity will yield, say, 6% or 5.5%, but the other 70% will yield 2 points.
Right.
So then I'm getting roughly 7% on my own money.
Right.
Which is decent enough if the property is high quality.
Okay. How does real estate play a role in the way you want to structure your own portfolio?
I am very well diversified in my holdings. Real estate is a long-term hold. I expect it to hold value in inflationary times. I would not put all my chips in one basket. For me, you need to have public instruments, stocks and bonds. You need to be in private investments, private equity, venture capital. You need to have real estate, both to hold for a long period of time and maybe to speculate a little bit if you're buying it right. I even have a little cash in my portfolio, and believe it or not, I have some gold that everybody used to say that I was pretty dumb, and it's up 29% in the last year.
Oh, wow. Even at these times?
Gold hit its highest in 10 years last Friday, and it's up again today on the drop of the market. The market today is down 1,000 points.
Wow. Okay.
It's a response to the virus, and people run to safety, and safety means U.S. Treasuries, means gold. So when one part of your portfolio drops, you want another part of your portfolio to hedge your position.
That's interesting. One thing that I kind of wasn't sure about this show, it's called The Long-Term Real Estate Investor. I wasn't sure, but you would sell if you had a profit, or are you I guess you are a long-term real estate holder.
I never go into property thinking that it's forever, and I never go in saying, I'm just going to flip it. I go in because it makes sense. If they make me an offer at a price that I would not pay for the property, that I think is overpaid, I consider very seriously selling it. If they're paying me fair price at which I would either buy or sell, I would not sell.
Come meet us over at signetinvestments.com. There you'll have access to our full podcast and articles archives. Also, if you subscribe there, you'll get new updates sent straight to your inbox. You can also find us across all social media platforms. Our handle is Signet Investing. Thank you and invest wisely.